Hello, here are my counts for XRP on a 2-hour chart. So the bullish scenarios are as follows. So 1, 2, 1, 2, 3, 4, 5, 3, 4, 5 in a wave A or 1. And now we are looking for a W, X, A, B, C in a flat in a wave Y for a wave B. And then we move up or a wave 2 and we move up in a wave C or a wave 3. So here it is a higher probability that we are looking for a flat than a triangle, but a triangle is still an option, a running triangle there. So A, B, C, D, E like this, and then we move up, but a triangle has a lower probability. If we take out this here at 1.1233, this ABC is invalidated because it's a very low probability target for a wave B. Then we need to resort to another count, which is a bit longer sideways corrective structure. And also we hit this line, meaning that here in this zigzag in a W, it is a low probability that we get a zigzag down in a very deep corrective manner. It's a higher probability that it is a more sideways structure since we hit this line as well. And if we get down here and take out this line at 1.0608, then it's a low probability wave 2. So if we move down here, take out this line and end between these two lines, is a higher probability that this is a wave B. And if this is a wave B, it's a higher probability that this is a wave A, and then we get a wave C, and then we move down taking out this low. So this is the invalidation for this scenario, and you need to have it here because this is so much better as an impulse, meaning this is either a wave A in a zigzag or in an impulse. So therefore I have the invalidation over here. But nonetheless, if we take out this and move down, we have to resort to another count, and that is a bit longer sideways here. So here is exactly the same, wave A and then W, but here you have W, A, B, C here, the flat in a wave X, and now you are looking for this wave X here, and this is the finished wave Y, and then you're looking for a wave Y here. So this could be like a 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5, and I have a flat over here. So this is the wave Y over there, and this is wave B, and then you move up. This is like a Picasso style drawing, but I hope you get the idea. So here, we didn't hit this on our way up with this move, so W, X, Y, which increases the probabilities that this is indeed a double zigzag up in this matter. And also same here, low probability wave 2, exactly the same targets as the other one, and also the same invalidation here. But both of these are looking for higher prices just because of this being an impulse in a wave A or a wave 1. So the last bullish scenario that we have is this. So here 1, 2, 3, 4, 5, wave A, same as before, but here you can count this as a wave A. But then if we were to count it like this, you need to hit this target, minimum target for a flat, here at 1.1231. If we don't hit this, then this scenario is invalid. So this is just like a reserve. If we hit this, then you can expect 1, 2, 3, 4, 5, a wave C, an impulse down. So you don't get surprised by having like an impulse in a wave C and thinking like, okay, so we hit the top here and this is wave 1, but no, this is then a higher probability for a wave C, and then we move up. So exactly the same as the other scenarios, low probability wave 2 target here, as I have showed you twice already, so 1.0608, and the invalidation is the same here. So the only bearish scenario that we have here is this. So this means that we need to count this as a finished wave C. So 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, same as before, but this is then wave C. And now we have a wave 1. So the only wave 1 we can count in this mess down is a leading contracting diagonal. So A, B, C in a wave 1, 2, 3, 4, 5 like this. And you can see that the proportions are not great in this case. So here you need to have a leading diagonal in a wave A here, B, and then a wave C to finish wave 1 of this leading diagonal here, which is uncommon. And also a leading diagonal is usually contained within parallel lines, and you can see that we are way above these parallel lines. So this doesn't fit great. It has lower probabilities of being a wave 1. But nonetheless, it's not breaking any rules, it's just guidelines and the proportions. So it's perfectly viable according to the rules. And here, if we take out this at 1.1223, it's a low probability wave 2, meaning it's a higher probability for the bulls to take out this high sooner or later. But this scenario then is looking for a 1, 2, 3, 4, 5, and so on, looking for a way lower prices. So I have shared these before in the Telegram channel here. At July 17, I wrote this, and this is what I'm currently actively tracking as of right now. So feel free to join the Telegram channel. It's in the description link and also on my homepage. If you found this analysis helpful, feel free to subscribe. And you can also find Elliott Wave resources at mellantrading.com. I'll see you in the next one.